It's similarly to other speakers, it's a pleasure to be here for me as well, for the second time after last year's summit. And I'm very glad to see that the scope of what the agenda covers is expanding. Last year, I would ask you a question. How would you describe last year's summit with one word? For me, it was enthusiasm. So there were many panel discussions and presentations on what we shall do. And I think it's very important to have this full commitment towards the green transition. This year, let me give another perspective to this topic and focus a bit more on practical aspects of how we can do that. But before going to the details about the how, let me show you a rare footage of a positive externality, apart from, like, I don't know, microeconomic books. This picture is not the weather forecast for Europe for the summer, but in fact it shows the PM 2.5 component in the air and how the air is polluted inside different countries if we look at the PM 2.5. This could be resolved, then that's why I'm mentioning the positive externality, if we resolve the carbon reduction. We have been talking quite a lot about, as I mentioned, what we need to do. But we need to put this whole discussion into the local perspective, meaning Central Eastern Europe and Southeastern Europe, and to observe a little bit what's the wealth of the companies in the region. You saw that between the two pictures of Europe, there is quite a big correlation. How the country is developed and how the air quality looks like. So there are quite big differences in the GDP per capita for the European countries. And you can see Central Eastern Europe and Southeastern Europe is lagging behind quite a lot. There are 2, 3, 4 times differences in that. And still, the leap should be the highest in this region, because the gap is the highest towards where we should be. There were many discussions already about the energy mixes in the region. I would just highlight that you can see, just highlighting 4 countries, but we can list a couple of more as well. What is the component of the coal in the power generation? This is an issue, I would say, that not so easily resolvable. Why? Because we talk about 7,000 to 8,000 megawatts that we need to replace, which is the installed capacity in coal currently in the region. I'm not quantifying the costs of the balancing capacities. I'm not quantifying the system operation costs. I'm just highlighting that even if we just replace those installed capacities with renewables, it would amount up to probably 10 billion plus euros. It's a huge amount, once again, having these GDP capita figures in the region. And last but not least, there is another aspect. So there are like 2 types of challenges, I would call it. One is the carbon intensity coming from, or mainly stemming from, the energy mix. And the other one is the energy intensity. You see the EU 27 average energy intensity compared to the region, and it also gives a very clear answer that what are the alternatives also to make further reductions. But once again, quantifying how to switch to a more energy efficient operation in a country level when we talk about the entire GDP, it's not an easy task to answer. And one more aspect. This shows the CO2 quota prices for the last period, 1, 2 years, 3, 4 years in Europe. So It's also a very good question that what is the ideal CO2 price which could incentivize reduction, because if it's cheap to pollute, I would say that it will be less incentivizing for everyone who is above the allowed level, and then buying the quota in exchange. On the other hand, we have other challenges not just in Europe, everywhere in the world, that we just recently survived I would call it like this, the high inflation and economic slowdown crisis, partially stemming from the high interest rate environment. So now, after the monetary policy burden is released, then there is an economic policy burden, and the policymakers are probably having headaches on how not to cause further slowdowns to the economy. So reducing the emissions and incentivizing it in the current environment, in that point of time where we are right now, it's again quite challenging. And we are well aware how the electricity prices are formulated, so I will even not highlight it too much. But once again, it's challenging not just in the region, everywhere else, in the current macroeconomic environment, where we are struggling with reboosting the economies or revitalizing the economies everywhere, and to avoid recessions, to decrease heavily the carbon emissions. So after talking about the setup in the region, let's focus a bit on what we are expecting, what are the key actions that we may focus on. Definitely, here you can find the stakeholders, on the left-hand side, what we are expecting. Legislative changes are obviously one of the most important ones, and we talk about legislative changes, not just directives or the smaller level, implementation of smaller level acts, but also wider economic level activities as well. When I'm talking about it, I mean enhancing cross-border capacities, balancing system capacities, transmission and distribution system strengthening, system integrations in the region, and similar activities like that. That's very important from the state side everywhere. There is one good example recently. You probably heard that it was announced that the electricity exchange of Hungary, Slovenia, and Serbia will be under one ownership. So there is certain activities have been done in that domain, and there are some progresses, but still a long way to go. And there are the other stakeholders in the equation, the investors and the banks, which shall also face with the new reality. And when I ask the question whether we can afford the transition, there are a couple of compromises. So it still should be yielding properly to every participant, but there could be a question raised whether with certain lower yield I would be willing to invest in green energy as an investor, or as a bank, whether I would be willing to accept certain riskier schemes than it used to be in the past. I will answer to that question very soon. And so let's see how, what I mentioned at the beginning, how actually we envisage to walk this talk that we have been doing for quite some time. I would say that this paradigm change that a couple of the panelists have already referred to is very crucial. Coming from a feed-in tariff system, which was the first wave of renewable energy generation, we have shifted completely to a market-driven, PPA, power purchase agreement driven scheme. This has two main challenges. One is that you are facing with a private off-taker instead of the state. I will talk about it a bit more. And the other one is the tenor mismatch. So making a project viable for bank financing, it would probably require a tenor somewhere between 12 to 15 years. All these other assumptions I will not list, the capex and the electricity prices. Whereas on the market, it was also mentioned, the available PPA tenor is a couple of years, maybe up to 5 years. So there is a huge risk of renewal, and not only the renewal risk is huge, but also the repricing risk, that what will be the price at the date of the renewal, and then how long it will be renewed. And the other aspect, which I mentioned about state versus private enterprise, is related to the, let's say, financial strength. I would call it an off-taker risk. So when you are facing with the state, there is like very limited risk of non-payment. When you are facing with a private enterprise, even if you make a risk assessment at the beginning of the process for a period of 10 to 15 years, or even for a period of 5 years, there could be challenges. So one thing is the liquidity problem of the off-taker. That's a significant risk. And the other risk is the voluntary opt-out of the off-taker if the prices go in an unfavorable move. What does it mean? If renewable energy installed capacities will significantly increase in Europe, systems will be more integrated, prices will drop, and then off-takers will face with a situation that maybe buying it on the spot market is more favorable to me. So for covering that part of the risk, it would really be good, similarly to the gas market solutions, to have kind of take or pay agreements. So even if you don't take, you need to pay for the respective tenor. These are the most important challenges. For all the other categories, I would not necessarily highlight. And last but not least, a few words about how exactly or what structures could be like viable. I think without making the complete list, it's very important that we have on-the-spot measurements, especially important for wind, but equally for solar, that we don't have leverage principles in advance, but rather we are sizing the debt bottom up. So we make all the assumptions, then we calculate the cash flow, and then we size the debt in line with that. So I couldn't say whether 20 or 40% equity is needed without seeing those in advance. Preferably applying higher probabilities in estimating the power generation, so not P50, but rather P75 or P90 in the model. This is also very important, and also to calculate with not overly optimistic electricity prices, because all these trends in Europe and the further boosting of the energy transition towards the green energy will probably result in slightly decreasing prices. These are the most important conditions which I would focus on. And finally, I would say, I would just reiterate what my respected colleague, Mr. Pókos, mentioned earlier in the panel discussion, that in the banking sector, there is a very, very strong capital position. So capital adequacies are, I would say, all-time high. And besides that, the liquidity in the banking sector is also quite high, meaning that funding is available almost in an endless manner. But what we would need from the IFIs definitely is kind of cooperation in some other domains, not just necessarily on the funding side and not just on the technical assistance side, but if possible to have co-financing for larger projects or equity and debt financing together. And the other thing that is important for smaller scale projects or for SME segment support, to have risk-sharing facilities, meaning guarantee schemes. And I would, let me give you a good example. In Hungary, there is a state-owned guarantee fund which provides 80% coverage to SME or MSC segment when they are asking for debt financing. This program and this institution facilitated placements overall in the volume of roughly 10 billion euro is the current stock in that. So this shows that it's very, very needed in that segment, and such kind of programs, if possible to be provided by the IFIs, would boost up the regional transition heavily. As I promised, I hope I was not too long, so thanks very much for your attention.